The fourth quarter rounded off what has been a strong year for global commercial real estate, with full-year sales activity rising by 4% from 2017 to $733 billion, marking the best annual performance since 2007. Regional activity mirrored 2018's trend, with the Americas leading the way. Outperformance was driven entirely by the strength of the U.S. market, and full-year volumes in the region rose by 13% to $281 billion. Asia-Pacific posted yet another record-breaking year, as annual activity reached $159 billion, 4% better than last year's total. In EMEA, full-year sales were down by 6% to $293 billion. While core markets such as Germany and France experienced growth, the region experienced overall decline. London emerged as the world's most liquid real estate market, as annual investment volumes increased by 14% from 2017 to $36.3 billion. Meanwhile, New York jumped back into second place, as transaction activity in 2018 picked up from the cyclical low point seen in the prior year. Paris, which was the world's third most liquid real estate market in 2018, posted its best annual performance since 2007, thanks to a wave of foreign capital. Cross-border activity picked up during the fourth quarter, driven by inter-regional investment, which reached $72 billion. This brings full-year inter-regional flows to $229 billion, 2% higher than the prior year. Much of this inter-regional activity was centered on Europe, where investors from outside of the region purchased nearly $12 billion more than they sold in 2018. Investors from Asia-Pacific were among the most active buyers of European real estate, with $23 billion in acquisitions during the year. Although total Asian outbound flows were 61% lower than the total from 2017, driven mostly by a significant reduction in overseas investment by Chinese groups, other investors from the region have been providing global real estate markets with liquidity. Particularly notable were Singaporean groups, who emerged as the most active exporters of capital globally. As we look ahead to the end of 2019, we expect that global investment in commercial real estate will moderate by around 5 to 10% to around $680 billion. Rising investor caution due to geopolitical risks and market volatility stand to impact transaction volumes. However, we expect to continue to see an emphasis on indirect investment, entity-level transactions, recapitalizations, and debt. Globally, we predict that the industrial sector will again see significant activity in 2019 due to strong underlying demand drivers and limited supply. Meanwhile, the office sector is likely to see a slight decline globally given the continued low-yield environment. The retail sector may face the biggest challenges as investors rebalance their portfolios to reflect changing dynamics in the space.